Alright, welcome back everyone. So hope you've all had a good week so far. Now in today's episode we're going to be looking at companies that have paid out their dividends for at least the past 25 years. And so we'll be taking a look at what it means to be a dividend aristocrat. But before we do, let's check out the like count for this video. So the goal that I'm setting this week is set to 82. So 82 thumbs up, give that a hit right now, and let's switch back to the trading 2-on-2 portfolio. I just want to show you how my dividends have been performing recently. So in the dividends tab here, we can see companies that pay out their dividends. So just looking at some of the high numbers within July, we can see that we've got the FTSE all-world high dividend yield. And these numbers are dependent on how many shares that I own. We can also see the S&P 500 gave £4.23 in terms of dividends. And then we have Tesco as well at £20. And if we take a look at the first week in July, we're already on £46. And for both June and May, we can see that we've constantly reached above £70 every single month. Now in the comments below, let me know how your dividends have been performing. But moving on to dividend aristocrats. And so these are companies that have to be a member of the S&P 500. They have to increase their per share dividend every year for at least 25 consecutive years. They have to have a market cap of at least $3 billion. And then an average of $5 million in terms of daily share trading value over the last 3 months. Now by far the hardest criteria here is to consecutively increase your dividends for at least 25 consecutive years. That really does determine whether you become a member of the dividend aristocrat or not. And before we check out a range of companies that are listed, you should be aware that none of these are high yields. In fact, the S&P 500 has outperformed the dividend aristocrats. But if you are building a dividend portfolio, it makes sense to have some really stable companies within the mix. And as a disclaimer, I own some of these companies, but most of these I actually don't have currently. And so the first company I want to check out is NextEra. We can see that trading 2-on-2 has a few here. So we've got one listed on the London Stock Exchange. We have a partners version on the New York Stock Exchange, but the top one here is what I'm going to be looking at. And I actually own some shares in this company, as you can see on the screen. So you can see that we have an energy company here. They are prevalent in the North of America. And they have a range of resources. So we've got renewable energy in the form of wind and sun. They generate, transfer and distribute the sale of electric energy within Florida. And this company has recently been added to the dividend aristocrat list. This was back in January 2021. So they've had 25 consecutive years of increased dividend yield. And the yield at the moment is 2.07%. So the next company I'm going to be checking out is ADP. And so they're in the information technology space. They've actually grown their dividends for the last 46 years. And you can see they have a current dividend yield of 1.88%. Now to be perfectly honest, this company isn't too interesting. We can see that they've got very generic terms here. So offering solutions to businesses. They've got different segments, so employer services and professional services. So overall a lot of outsourcing in terms of payroll services, talent management. But at the end of the day, this company has increased their dividends, and although personally I find it kind of boring, this type of company, they are clearly performing a service and they are making money as a result. How much, you're probably wondering? Well, their net income of 2020 was at 2.47 billion, their revenue all the way at 14.57 billion. It's a really healthy profit margin of just under 17%. And so sometimes you may have companies in your portfolio that you're not too interested in what they actually do, but they return a healthy profit, and as long as you're investing in companies that you know are not performing any harm, then it's always good to have some of these stable companies added to your portfolio. So let's move over to the industrial sector. And the next company I want to check out is Dover. And so we can see that this is a global manufacturer. They deliver equipment, components, software, digital solutions, and also service support as well. And so this company is a Swiss knife when it comes to all the services that they provide. We even have the likes of aftermarket vehicle service. And then at the other spectrum, we have solid waste handling. And the list really does go on. So we can see that their dividend yield at the moment is 1.35%. They've actually increased their dividends for the last 50 years. And then just checking out the financials here, so a net income of 683 million with a revenue of 6.68 billion. And so let's change the sector, let's look at materials, and the next company is PPG. And so this company both manufactures and distributes specialty materials. So we have the likes of the aerospace, marine, agricultural businesses, and then automotive equipment as well. So a range of different services that this company plugs into. So for the last 49 years, this company has increased their dividends. It's currently at 1.28%. And in terms of their net income, we're just over 1 billion. and then with a revenue at 13.83 billion. So as I said, all these companies, not the greatest of yields, but you do have the confidence that these companies will continue to pay out their dividends and increase them as well. And so let's again change sector. Let's look into the financials. This is going to be the last dividend aristocrat company that I look into, but there's a whole list out there. But the final company I'll be checking out is ticker symbol TROW. So we've got ROW price on the screen here, and they are a financial services holding company. So you're probably noticing that there is some type of a trend here. The types of companies out there, this type of company for instance is another one that isn't too interesting. It's another service-based company, so it's somewhat more generic, but they deal with management, record keeping, and they are globally focused, so North America, Europe, Middle East and Africa, and even all the way to the Asian Pacific areas as well. And we can see that as of December 31st, 2016, it served clients in 45 countries across the world. And so with a dividend yield of 2.2%, you're probably wondering how much in terms of revenue and income they're making. So revenue figures 6.21 billion, and then the net income at 2.37 billion. That's the best profit margin that we've seen today at 38.23%, and it's also the highest dividend yield that we've covered today. And so for the last 34 years, this company is increasing their dividends, so you can have that confidence that they'll be able to increase as the time increases. Now, another point to be aware of, companies such as AT&T, which is also a dividend aristocrat, they may be dropped from the list. And so even if you have companies that have been increasing for the last 25 plus years, there is always the chance that they can be delisted. It's just something to be aware of. But equally, even if they don't make that list, maybe they've just had a bad year and they lose that status, they may still be a healthy company. And so there's no need to panic and sell out. But there's something to be aware of, that once they make it on this list and they've been paying out the dividends for the last 25 plus years, there's always the chance that they can be removed. So I hope that video was interesting for you today. Let me know in the comments below if there's any other types of dividend-based companies that you recommend, and I'll be sure to check them out in a future video. So thanks for watching everyone, and with that said, I'll catch you in the next one.